Hi class, I hope everyone is doing well. For today's video, I'd like to go over cache internal controls. Let's start the first one. First it says you want to match each situation with the fraud triangle factor. Opportunity, financial pressure, or rationalization. Okay, so the first one says an employee's monthly credit card payments are nearly 75% of his or her monthly earnings. Well, in this situation, it's going to be financial pressure because the employee might feel financial pressure to commit a fraud. Next one now says an employee earns a minimum wage at a firm that has reported record earnings for each of the last 5 years. This one's going to be rationalization. An employee could feel rationalization to commit a fraud. They rationalize in their minds that it's okay to steal because, well, the firm's made record profits. Next one. An employee has an expensive gambling habit. This will also be financial pressure. Because an employee feels financial pressure to commit a fraud because they have an expensive gambling habit. The last one says an employee has check writing and signing responsibilities for a small company as well as reconciling the bank account. Here, the individual has the opportunity to commit a fraud. Okay. On the next one now. Okay. Next one here says for the cash register statement for Bluestone Industries reports sales of $6,871.50. Okay. Now, so record a journal entry for each of these different situations here. The first situation says here that the cash to be accounted for exceeds cash on hand by $50.75. All right. So let's see how would we record this. So first of all, you want to start off by debiting cash. Debit cash for $6,820.75. Even though you had sales of $6,871.50, you want to subtract the $50.75. Now, this difference, we want to debit that to cash over and short for the amount, which is $50.75. Okay. And then the account we credit will be sales revenue for the amount reported, which is $6,871.50. Okay. Now let's go to B. B would be a little bit different. It says cash on hand exceeds cash to be accounted for by $28.32. So we're still going to debit cash, except now you want to add that to the $6,871.50. Now cash will be $6,899.82. And now we're not going to debit cash over and short. We're going to credit cash over and short for $28.32. We're still going to credit sales revenue, the amount reported, which is $6,871.50. Okay. This one now. Let's go to number 3 now. Number 3 says you prepare the journal entries for a petty cash fund. Okay. So it says on March 20th, your petty cash fund of $100 is replenished and the fund contains $9 in cash and receipts for postage, freight out, and travel expense. Okay. So we know the date, it will be here March 20th. Okay, so we're going to start off by debiting all of our expenses. So we have the first one, postage expense, $52. And then we have freight out for $26. The last expense we have is travel expense, which would be for $10. Now, what we're going to do now, you want to credit cash for $91. And the reason why it's $91 is because your balance has to go back to being $100. It said when you replenished it, there was $9 left. So take the difference. 100 minus 9 is 91. Now the problem is, though, when you add up our expenses, we have a $3 shortage. Okay, so you want to debit that to cash over and short the difference, which is, in this case, $3. Let's go to the next one now. So listed below are 5 procedures followed by Eckenberry Company. Okay. So for each one, we want to say, is each a good or bad example of internal control, and which internal control principle is being followed or violated. Let's start with the first one, number 1. Okay. Number 1 says, several individuals operate the cash register using the same register drawer. That's going to be a weak internal control. And the principle being violated is establishment of responsibility. So now number 2 says, a monthly bank reconciliation is prepared by someone who has no other cash responsibilities. That's going to be a good internal control. And for here, the internal control principle being followed is independent internal verification. That's one now. Joe Crockrell writes checks and also records cash payment journal entries. That's going to be a weak. There, that clearly violates segregation of duties. So now, number 4. One individual orders inventory while a different individual authorizes payments. That's going to be a good internal control. Same thing as number 3. It's going to be segregation of duties. The last one, number 5. An unnumbered sales invoice from credit card sales are forwarded to the accounting department every 4 weeks for recording. That's going to be weak again. Because your sales invoice should always be numbered. This will be documentation procedures. And let's go to the last one now. Alright, now we're doing petty cash again, except it's going to be various entries. So start with the first one. First says, some company established a petty cash fund on May 1st for writing a check for $100. The company reimbursed the fund on June 1st and July 1st with the following results. Okay. The last one says, on July 10th, increasing from $100 to $130. Okay. Looks at the first entry, on May 1st. On May 1st, you established a petty cash fund, so you want to debit petty cash for $100. And then you want to credit cash $400. This establishes the petty cash fund. Okay. Now let's go to the next one, on June 1st. Alright, so it says here you have receipts here. Delivery expense, postage expense, and miscellaneous expense. Okay. So I'm going to start off again by debiting the expenses. First one is delivery expense for $31.25. Okay. My next expense will be postage expense, which would be $39. And we're also going to debit the last one, miscellaneous expense. This was for $25. Alright, then we want to credit cash for the difference. Okay, it says here, you're supposed to have $100 in the account, and cash and fund is $1.75. So you want to credit that for $98.25. Okay, except the problem is, when you add up these 3 expenses, there's a $3 difference. So you're going to debit cash over and short for the $3. Now, on July 1st. Okay. As always, we're going to start off again by debiting all of our expenses. So the first one is delivery expense, $21. And we continue on. Next one we have entertainment expense for $51. Our last expense is miscellaneous expense. That'll be for $24.75. Now, again, the balance has to go back to being $100. And there's $3.25 in the account. So if you take 100 minus $3.25, you want to credit cash for that difference, which in this case is $96.75. And when you add up the three expenses, it equals $96.75, so there's no cash over and short. And the last one, on July 10th. On July 10th, it says you increase the fund from $100 to $130. So to increase a fund, petty cash fund, you want to start by debiting petty cash. And you debit it by the difference. So you just take 130 minus 100, that'll be $30. Then you want to credit cash for $30. Okay. All right, class. That'll be it for this week. If you have any questions or comments, feel free to contact me. Everybody, have a great week. Thank you. Bye.